Okay, so for today's video, I'm going to be going over SMT divergences. Now, hopping straight into this, there's two things that you're going to need for this concept, and that is a correlated pair. So I've got NQ and ES, which is the most correlated pair, and this is what I currently trade every single day. So I'm just going to go over the basics right now. Okay, so right here I have a small chart drawn out with very basic market structure. Now, if you pause the video, look what you can notice straight away off the bat. NQ has a low, a high, a higher low, and a higher high. ES has a low, a high, a lower low, and a higher high. So this low down here has taken out this previous low, sweeping liquidity to send price higher. NQ has not done that. We've left this low behind, but we've still got the reaction higher due to ES sweeping out this low. So this is exactly how you trade SMTs. What you do after seeing this is you draw this to the low, to the higher low, and then you'd mark it as an SMT, and then you'd know that this can act as a very strong sweep of liquidity, even though we haven't taken out the low, and it will gather momentum to send price higher to your next drawn liquidity, which could have been something up here. Now, using this concept, you can also use this the other way. So say NQ has come up, taken out this zone of liquidity up here, and ES has failed to come this high to take this out. So what we've got now is an SMT with this high, which would result in sending price lower, like this, as we swept it on NQ. So now we're looking for the reaction lower. So essentially I just trade these as extremely strong sweeps of liquidity. I use this in everyday trading when they do turn up, and I've found using them, implementing them in my model has highered my win rate by quite a noticeable amount. Okay, so now looking at the charts, we've got ES here and we've got NQ here. They're always going to be like this. It's going to be NQ on the left, ES on the right. This is just how I trade it. It can be different for you guys. So what I've noticed is we have two obvious highs and lows in the market. We have this low right here and this high. Now, if you look on ES, we can mark these out. There's your high. Here's your low. Mark them out on NQ. Here's your low, and here's your high. Now, you've marked out your highs and lows. If you look at the difference between NQ and ES, one high has been taken out and one high hasn't. So right here is going to be your SMT divergence. So right here is going to be your SMT in the market. Notice how NQ has swept out this high, ES has failed to. So right here you will have your SMT. Now looking at the lows, we have this low right here. ES has came to take out this low, and NQ has failed to do so. So down here we have a bullish SMT. So when you find SMTs at the lows, they will always be bullish, no matter if ES is the one to come down and sweep or NQ is the one to come down and sweep. SMTs at the lows are always bullish and SMTs at the highs are always bearish. Now, getting our basic understanding out of the way of SMTs, what can you notice here with the previous day high right here? Notice how it has been left on NQ and ES has taken it out. So I trade SMTs a little bit different to other people. So most people trade them as a liquidity sweep. I do trade them as liquidity sweeps. However, notice how ES has broken this high. So we've created a break of structure with this SMT. So now you can expect a continuation of this trend. And once price takes out this high, you can expect us to keep going higher instead of sweeping this and then coming lower. So this is how I use SMTs to get my daily bias. I'll mark out the highs and the lows of the range. So we've got a 4-hour high and a 4-hour low right here. Our 4-hour low is inside of a fair value gap, so this is going to be our intermediate term low. Now dropping down to the 4-hour on ES, we have the same 4-hour low right, where is it? This is the same 4-hour low here. So the easiest way I use to find these is using the cross, and notice the cross in the center of the screen. I use the horizontal line to line up my highs and lows to see if it's the same candle. So if you see the candle that I'm currently hovering over, this one right here, if you look on ES, the opposite screen, you can see how the horizontal line is also on that same candle. So that's how I mark up the same candles, highs and lows. So right here, this is the same high on ES and NQ. So as you can see, this high has been taken out, and we have just completely left this high. ES is trading through the range, NQ is trading inside the range. So right now we've got a bit of a uncertain range with the SMT at the highs. So price is just chopping around now. So what I'd like to see is, as ES is trading very high in the range and I want to see higher price, I'd like to see price come lower on NQ, take out this low and then come up for higher price. And what I'd like to see with ES is ES trade lower with NQ, however missing this low down here, acting as a much stronger liquidity sweep to send price higher. That would then be your SMT at the lows, sending price higher to take out this SMT up here. Now I've dropped down to the hourly time frame now, and as you can see, this is the high of the range on NQ, and this is the same range high on NQ but now on ES. And as you can see, we've just completely broken through this and we're trading higher. We're trading higher through this. Now something that I've noticed at the lows, which has given momentum for this upside move, is if you look at these lows down here, these obvious lows, marking them out, drawing it out to the left, drawing it out to the right. As you can see, NQ has completely missed this low, whereas ES has swept out this low. What's happened as soon as we swept out this low, we've had a move higher in price. Now SMTs are very useful. I personally use them for entries, exits, daily bias. I'm just going to go over some of the trades that I've taken. I've journaled them down in my Discord. I'm going to show you why I exited due to SMTs or why I entered due to SMTs. Okay, so notice in more or less every single trade that I take, I'm looking for an SMT at the lows if I'm looking for a bullish trade, or an SMT at the highs if I'm looking for a bearish trade. So right here, this is an SMT. Looks like we would have swept liquidity on NQ. I'm guessing it's with this sweep here inside this 4-hour intermediate term low in this 4-hour fair value gap. So I'm guessing price came lower, took this out and then moved price higher. I don't remember this trade very well. So yeah, I used an SMT at the lows to send price higher for this trade. Now if you look at this trade, I've marked up an intermediate term high inside our 4-hour fair value gap, and we have an SMT with this high and this high here, meaning that ES came higher and swept out this intermediate term high. So NQ now doesn't need to take out this high, and it gathered enough momentum from ES doing this to move price lower to take out this sell side liquidity down here. Now right here, these are my favorite types of SMTs. When we have an intermediate term low inside a fair value gap, we sweep it on NQ and we create an SMT on NQ. These are my favorite type of SMTs. I've just found the strongest conviction trade in them like these, like this. And as you can see, we had our nice move higher, bit of a bad entry, a bit high in the range, but a good 1-to-1 RR trade. Okay, so right here, this trade has an SMT at the highs and an SMT at the lows. So we came lower, we created a 4-hour SMT inside a 4-hour fair value gap. We created a market structure shift and a pullback to a fair value gap. So this was a great trade. Now this was my target, which did end up getting hit. However, once ES took out this target, I looked to close the trade. Seeing how we started to get a reaction lower, I closed the trade due to the reaction lower. And as you can see, we've got a small retracement, and this fair value gap was strong enough to send price higher back up to my initial draw on liquidity. However, this was good risk management on my behalf, having seen many trades get reversed from this point just due to this SMT. They have a high probability of reversing all the way back down to break even or your stop loss. So right here again, we have our sweep and our SMT at the lows inside of a mitigation block inside a 4-hour fair value gap. So this is a very strong couple of confluences to send price higher. Then we get our entry model, which is an inversion fair value gap to send price higher. Now, looking at where my break even is, it's the high of this current choppy range. Now, if I had have seen ES sweep this break even spot before NQ did, I would have most likely been lowering my risk or bringing my stops to break even. Okay, so this is going to be the last one that I go over. This was a great trade. Again, we got our 15-minute intermediate term high. ES and NQ have taken this one out. However, NQ has had a final sweep on this high, which gathered momentum to send it lower, trading off a CISD and an inversion fair value gap, and this was a perfect trade to the downside, using both a sweep of liquidity and an SMT, pairing it up with a fair value gap as well. Now, in my opinion, this is a very easy and simple concept to learn. You're basically using this as a reversal point or a continuation. It can be used as both breaks of structure, market structure shifts, and sweeps on liquidity. So you can use SMTs for continuations, and you can also use them for reversals. It goes over the same concept of body closures. If we had got a body closure below this low, then I would have been looking for a continuation on ES as well as NQ. However, if ES had have taken out this low, then we could have been expecting a move higher on NQ, being your bullish SMT at these lows here. So this is a very simple concept to learn. Don't let this confuse you guys. What I'd advise whilst studying this video, if you open up the charts for yourself, have a split screen on, or have ES on one monitor, NQ on the other, and just try to spot as many SMTs as you can, and then look for the reversals or the continuations after seeing those SMTs. I'd also advise trying to find as many SMTs as you can on every time frame. Now, I use these on every single time frame. I use these on the monthly, the weekly, the daily, the 4 hour, the 1 hour, the 30-minute, and even lower time frames for entry points. I never enter off an SMT. I always use them as a confluence for my trade, or to not get into a trade. I'd advise you guys did the same thing. They can work as an entry point if you're looking for a turtle soup in the market, which is essentially entering off a liquidity sweep. So if we SMT your turtle soup, then that could also be a good entry point. However, I've never used them like that, so it's up to you guys what you want to do with them. So this is the last part I'm going to be going over, and this is the internal range SMTs. So as you can see, we have this fair value gap right here, which both NQ and ES have tapped into. That would be this one right here. Now notice what ES has done. It has chopped around and it has actually come for this lower portion of this fair value gap down here. So we created an SMT with this lower fair value gap, and that has given price momentum to trade higher. So now we have an internal range SMT and tapping into a 4 hour fair value gap. So this is two confluences instead of one for bullish price action, and we did get that in this candle here. We've just chopped around. It was a Friday yet again. Friday price action tends to be very choppy. But yeah, as you can see how I've used this with a fair value gap. ES has tapped into the fair value gap right here. NQ hasn't. So you can use this as a bullish SMT in the markets as it's at the lows. This works for bearish fair value gaps as well, of course. But yeah, so this is a good thing to keep in mind as well, and something to also study and backtest in the markets for yourself. Okay, so that's going to be everything for today's video on SMT divergences. You can screenshot this if you want. Notice how this would be your NQ, this would be your ES. This high has taken out this high, and this high has failed to on ES. So there's your bearish SMT. Now this is a very simple concept. I'd always advise, after watching these videos, you go find these concepts for yourself, you go back test them, and you go find them in the live charts, and then you can forward test them in the markets, see how they work for you. I'd always advise forward testing and back testing before using any of the concepts that you've learned. But build up your own edge, build up your own conviction in these concepts working for yourself. Okay, so I am currently in the process of making what I call a cheat sheet. So it's going to be a very small booklet with about 3 to 5 pages covering beginner concepts, and then it's going to go all the way through to concepts that I've used to make money myself personally trading in these markets. So there's going to be quite a few of them. I'm going to be putting a lot of work into these, so that it helps you guys understand the markets better. I will be releasing the link to my website in the description when it's ready to be set out. But for now, I'm just going to be posting these YouTube videos for free, so you guys get as much education from these as you can. And then I'm going to be releasing these PDFs, these cheat sheets, and I'm also going to be releasing a Discord server, and it's going to have a backtesting channel, it's going to have loads of analysis, it's going to have daily bias, live trading at some point. So yeah, I've got a lot to come. At the moment, I'm just building up these videos, making a playlist for all my students. I've just found it quite difficult recently to teach my students the same stuff over and over again. So instead of doing that, I'm just creating a YouTube playlist where everyone can come to and learn the same stuff, be on the same level, so I don't have to keep explaining myself. So yeah, after this playlist is done, I'm going to be releasing a link to my website, and a link to my Discord, where there's going to be different products for sale, and there's also going to be a lot of free stuff that you can use to excel your trading and become profitable.